How's it going, everyone? It's Sam. I appreciate you guys so much. We just hit 3,000 subscribers, and I put a community poll out there talking about how I want to do a Q&A session, and we're going to do that today. We had some really good questions from some of the subscribers here, and I'm going to go through just both the Instagram account and the Instagram questions, then also the YouTube questions from the actual question on the community tab. So we'll go over that, but before we do, we're just gonna sit back. I know that I have a tie on and everything because I was at work today and we changed our dress code recently, but I do have a Bud Light, so we're just gonna sit back and relax. And let's go through this. So we had some really great questions and I've looked at all of them, but we're just gonna go kind of quickly through it because there are a significant amount of them. Thank you to everyone that wrote on them and wrote me about these questions. So Ali Bear, or Oi Bear, said, "Hey man, just discovered you and love your energy and perspectives. I have 3 questions. This week I found out about ETFs and regular stock that pay monthly dividends, all from 4 to 11% a month, main div, PFF. What are your thoughts about creating a dividend strategy with this monthly approach?" So I think that is a good approach. I personally have two monthly dividend payers in both Realty Income and SPHD. So I think that this is a good approach, getting these monthly dividend payers. You still have to do all your due diligence, make sure that they're all good stocks and they have a good growth potential and they're not too leveraged and all that, and just make sure that they are low expense ratios too. So I haven't taken a look at these stocks specifically, but I don't think there's anything wrong with going after a monthly dividend approach. It makes it a little bit easier to tell kind of what your monthly dividend income is going to be month to month. And then how long do I hold stock for usually, and why don't you just trade them in and out when there's a big price movement? I tend to hold stocks for a very long time. I mean, I think I've sold out of a couple positions maybe since March, but typically I want to hold my stocks for a long term. Like even Carnival Cruise Lines, for example, I've been holding on to that for a while, and I could sell it now and try to move it somewhere else, but I think that there's a good growth opportunity over the next 3 years or so, 5 years, when they get back to where they were. As long as they don't go bankrupt, I think that they'll double. So doubling your position in 5 years is actually really good. I know that all these other stocks have been growing at 20 or 40% just over the last month or two, but just being able to double in 5 years is actually a really good return. It's much better than the general stock market return. And if you do that from now until whenever you retire, you're going to be able to do quite well. It's going to happen for you a lot quicker than most people. And I don't try to sell out when there's a big price movement because I do all this research to find the best companies, and I want to hold on to them long term. I don't want to be someone that's selling in and out of them. I think that there's a lot of room for error when you do that. So whether Facebook goes up 20% or 40% or 0%, I feel bullish about them going forward. So I'm not trying to get in and out of stocks all the time. I'm not a day trader. From what I've heard, I've never done day trading, but from what I've heard, it typically does not go well for people. So I try to hold long term. And then how do I like YouTube so far, and any advice for someone who wants to start? I think if you like it, you should just start. I mean, you're not going to post the best videos to start anyway, so don't worry about that. Just do your best. For my advice, I'd just say get into it. Try to post regularly, so make sure you're editing. At first, I didn't edit my videos, so it was... I didn't have anyone watching at first, so I put very little time into editing, which is not a good way to grow. I'd say try to make really good quality content on something relevant. So, at first I didn't post on anything that was relevant to the time right now, so there wasn't a lot of traffic being driven. Then also post on stuff that maybe other people haven't covered a ton of, because if you post on financial independence, a ton of people have talked about that before. So try to get views first, and then maybe you branch out into more general stuff, more general knowledge stuff. So next question from Johnny Salgado. He wants to ask, stock bubble prices will always be around. They're a big problem nor a big advantage. What's your take on it? So stock bubbles have always been around. Generally, if you're like in a stock market index fund, it doesn't necessarily affect you as much. So sure, the general market will dip, but you're well diversified. That's why I like to diversify across different sectors. So I don't buy heavy into 2 or 3 different stocks. I have maybe 15 to 25 different stocks that I'm in. I think diversification is really key for that, and that's why I like not putting all my money into some stock that I just heard about recently or anything like that. I think it's important to diversify, especially early on, because later on it's important just because you don't want to lose hundreds of thousands of dollars if you're close to retirement. But early on it's important just for your own mental health that you don't lose a lot of money in some up and coming stock and then maybe stop investing for a few years. You want to be able to keep the momentum going. Okay, what do I think is best, a target date fund or mutual funds, from Bronx Project? So I think that target date funds are great. I personally have all my retirement accounts in general stock market index funds, like through my job, my 401k and my HSA. I have them in index funds. So target date funds I think are pretty similar, at least at my age, to just a general stock market index funds. There aren't a lot of bonds in the target date funds for me. I think they're great. At my age though, I wouldn't even want the 5 or 10% bonds that they have. But if that's what your options are, I would pick the target date fund. A lot of people like mutual funds. This is what people used more 10, 20, 30 years ago, because there weren't a lot of target date funds, there weren't a lot of index funds, there were just mutual funds, and that was a way to diversify. But a lot of these carry high fees. A lot of them are actively managed and don't typically beat the general market anyways, so I don't really like mutual funds that much. I don't think that they outperform the market for the most part. Of course, you'll always have one that says, okay, we've averaged 20% for the last 5 years, which is great, but if there are 10,000 different mutual funds, 1 or 2 or 3 are bound to do that. So they'll probably not do as well next year if they've done well the last 5 or 10 years. All right, so now we're going on to the YouTube questions. How do I analyze and understand if a stock is good? So that is a loaded question. Hopefully after watching some of my videos it becomes more clear kind of what I do to analyze a stock. But usually I hear about it from the news, or I go looking for it, or I hear about it on YouTube. There's got to be some way to hear about it, right? So I hear about it, I take a look at the balance sheet, I take a look at whether, first of all, is it a risky business? So is it something that is going to do poorly right now because of shutdowns or people not going to it? Do they have a good amount of cash sitting around? Have they been growing revenues? Have they been growing earnings per share? If not, why not? And then I try to figure out whether it's worth the risk of putting money in it if it's stayed stagnant. I also like dividends, but that's not necessarily something that I need for a stock. But if they've been growing in share price and dividends, that's a great 1-2 punch. Then I also try to take a look at if there's anything that's happening in the news where there's a big opportunity for them to grow even more. And I kind of weigh all that stuff out. What will be my next move in the stock market? Well, I bought more Planet 13 today, so I bought Planet 13 stock. Not a huge amount, but what was left in my brokerage account. So I almost doubled the position, but I had a pretty small position in the first place. But my next move is to buy index funds with my retirement just in a few days. Now, I just did a video this last week about some dividend stocks that I've been buying, and I'll link to it here, but you can check that out. I'm doing investments every week, so you can see exactly what I'm buying and why I'm buying it. What was my first investment? So this is a fun one. I invested in an index fund in college. So I had barely any money to invest. I mean, a lot of the money I had was from loans. I had a little bit of income, but most of it was student loans, and I started to read about investing, and I thought, okay, well, I need to get into investing now, so I opened up a Vanguard Roth IRA and invested $3,000 right off the bat, almost all loan money, but I invested right then, and it's done well for me so far. I think I'm up maybe 15% on it since 2 years ago when I put the money in, so not bad. And then how do I know when to sell stock? So like I said earlier, I try to hold on to stock. If there's something in the business where I think that they can't come back from it, I'll sell it. It really just comes down to whether I think the business is able to continue to grow over time and whether they'll get back to good growth in the future. Preston asked, he said, what are your thoughts on selling puts for passive income weekly? So this is something that I've looked into a little bit. I might actually have someone on in the next few weeks that's going to be talking about covered calls and doing that for passive income, but I don't have a good handle on it still. I've never sold options. I've never bought options. I just know that they're typically riskier, but covered calls aren't risky. So I have to do some more research into that. Right now, there's just so much that I can kind of juggle. So hopefully, I'll be able to provide some better information on that soon and let you guys know what my thoughts are on it. What are my thoughts on building a hybrid portfolio for passive income with REITs and selling puts and calls and growth stocks? I think that's really interesting. So I don't know if this would be technically passive if it's selling puts and calls, but if you could get passive income, so dividend income from the REITs of maybe 5 to 10%, and then you could also sell puts and calls. What I don't understand is how much of a significant amount of money you can get from puts and calls, so I have to check into that. I mean, if you could get 10% return consistently, that'd be awesome. Then I might start doing that, but that is something that I think is really interesting. If you can beat the general market with puts and calls, I think that's great. That is something that I need to look into. Next question, any tips on the route to financial independence or freedom for someone in their early 20s looking to be free before 30? So if you're in your early 20s and you're looking to be free before 30, that's going to be kind of tough. I mean, obviously it's doable. If you're looking at that time span, though, you're going to have to probably make a good amount of money here in the short term, or have very low expenses, or get into real estate possibly. So my thoughts on that are to really focus on increasing income in the short term while keeping expenses low. One good resource that I really like, and it was really a game changer when I saw it, was Mr. Money Mustache. If you haven't already seen this, go to the Shockingly Simple Math Behind Early Retirement. And this is a great website. He's really one of the first big FI bloggers. So he breaks down the really simple math behind early retirement. And I almost did a video on this. I actually recorded it and just didn't like the way that turned out. But what they say in here is basically your entire retirement can be broken down by how much you save and invest versus how much you spend. So if you have $100,000 a year that you take home, and you spend $50,000, you save and invest, or really invest $50,000, you should be able to retire here in 17 years based on, a normal rate of return, and it's actually a little bit low for what they say that you should be able to get for a rate of return, so it's a little bit conservative there, but based on normal rate of return, you should be able to retire in 17 years. Now, if you make $500,000 and you spend $250,000 and invest $250,000, it should be the same. So I like looking at this. Now what we see is most people save maybe 5 to 10%, and if they didn't get any Social Security or anything, if they're using the rule of 25 or the 4% rule, it would take them 51 to 66 years to retire, which is just insane. But if you click here, they have a nice little calculator. You can type in how much you have in investments. So current portfolio value, what's your savings rate, what's your income. You can show more options here and talk about select the annual return on investment and all that. It's something that I really like. So let's say you make $80,000 a year and you want to be able to retire in 10 years. You can't plug in different raises or anything like that, but let's say you spend $35,000 a year. That gives you a savings of about 56%. Let's say your portfolio value is 0, you get 7% a year. What's your withdrawal rate? 4%. You could retire in 12.8 years. This is assuming that you have $875,000 at the end. So you can go down here and you would cross that barrier between these 2 years here. Now I will say, if you just want to retire from a job that you don't like in 10 years, you can definitely do that before you hit your FI number. Let's say you retire at 10 years and then you just make $10,000 a year. That will probably get you where you need to be. So that's kind of what I'm considering doing, more of a coasting financial independence. But that is a good resource, so check that out. The next question from Preston, what do you do personally in terms of real estate? So right now, I don't own any real estate. I actually moved home after college and lived with my parents, so I'm looking to buy a duplex, hopefully in the next year or so. I have maybe another business that might be in real estate, but I'm holding out to talk about that because it's nothing set in stone. But that is kind of where I'm going in the future. I want to own some real estate, but I kind of plan on splitting my assets between real estate and stocks. What do you do to become part of the private group that analyzes stocks? What do you need to do? So if you want, you can join my Patreon down below. There are different tiers, but they all give you the same thing. So you can join our Discord, talk to us about stocks. We have 4 people on there right now, and it's a great group to be in. Mike, favorite sports team? That's tough. I'd say I went to Michigan State, so Michigan State is by far my favorite college team. Pro basketball team, I'd probably say the Warriors. So I hate to say that, but I was a Stephen Curry fan back when he was in college. So don't give me too much hate. But I don't watch football all that much. I'll just watch whoever's on. But let me know who your favorite fan is down below, Mike. I want to hear. And then I think that is every question here. I appreciate you guys sending them in. I love doing this kind of thing and talking to you about just whatever questions you have. I like being able to interact. So let me know what you guys think about this below. If you have any questions, feel free to leave them down in the comments. I answer every question. If it's about a specific stock though, I can't really do analysis on every stock that is sent to me, so I usually check them out, and if they seem interesting, I'll do some research on it. But I appreciate you guys for watching this. Please leave a thumbs up, and if you want some free stocks down below, you can sign up with WeBull. You get 2 free stocks, one worth up to $1,400. And also, if you want to sign up with M1 Finance, you can use the link down below too. They are my main brokerage account and my main investing account, so I really like them. Thank you guys so much, and I will see you in the next video. Bye.